to this week's Manager's Thoughts, coming to you from Kelly at Synergy Asset Management. Today is February 17th, 2023. Had a busy week full of economic news, so let's get right into it. Alrighty, so this week was a busy week full of inflation and spending data that kind of guided markets this week, as we had PPI, we had CPI, and we had retail sales, and a few other smaller metrics as well. For the week ending Thursday, February 16th, the S&P ended down about 1.13%, Dow Jones ended down about 1.6%, NASDAQ Composite ended down about 0.3%, and the 10-year U.S. Treasury yield actually moved up about 2.4%. So definitely equity markets were not happy at these economic data points this week, but yields moved upwards because of them. Alrighty, so like I said, we had a busy week full of a lot of economic data points, January CPI really being one of the largest data points in this array of economic data pouring in, and so we had January CPI coming in hot at 6.4% year-over-year growth, and core CPI coming in at about 5.6% year-over-year growth. And so estimates forecasted both of these metrics to be lower, with CPI projected to be only about 6.2%, so we had 20 bips higher, and core CPI projected to be only 5.5%, 10 bips higher. So these might not seem like big differences, but Americans are definitely feeling it in their wallets. And so here you can see that the trend in disinflation, which is not a decrease in prices, but it's rather a decrease in the rate of inflation. The disinflation has been pretty flat since December, which obviously this is not a trend because it's only 1 month, but we've also seen that kind of periodically throughout the inflationary cycle that we're in here. So it'll be really important to just keep our eyes on inflation, CPI, and see how this continues to move in 2023. Digging in a little bit deeper into the CPI report, the monthly CPI came in at 0.5%, and the core CPI came in at 0.4%. And so both of these were kind of in line with expectations. And just to point out a few of the largest price movements in this CPI report that I found pretty interesting was the used car market decreased about 11.6% year over year. We also saw the transportation services increase at 14.6% year over year, which is definitely a big move, especially, impacting lower income Americans. And then utility gases actually increased about 26.7%. So definitely watch your utility bills this month, and I'm sure you've already been seeing that over the last few months. And then one last thing I wanted to point out was the food at home's 11.3% increase. And so you're seeing this at the grocery store. It's actually been growing more expensive to eat at home than it has been at actual restaurants. Here you can see the overall food category has only grown about 10.1%, whereas food at home has grown over 11% year over year price growth. And so, just definitely interesting points of inflation that we wanted to point out. Following a hotter than expected consumer price index report earlier on in the week, we also got the producer price index for the month of January. And so PPI came in at 0.7% month over month growth, while core PPI came in at 0.6% month over month growth. And so both of these were significantly higher than the expectations, actually almost double what was expected on a monthly basis. And so on an annual basis though, January PPI came to about 6%, and core PPI came to about 4.5%. We look at January of 2022 when PPI was almost 10%, was actually over 10%, and this is definitely moving in the right direction here. We can see a definite downward trend. It's just not as fast as economists in the Fed and producers and everyone was hoping for. Looking a little bit more closely at the PPI report, I found something really interesting about how goods inflation was actually about 3 times the services inflation from December to January. And so here you can see goods inflation about 1.2%, while services inflation for producers was only about 0.4%. So 3 times as much inflation in goods over the last month. Definitely just interesting data points, especially when we look at overall in the economy, service inflation being a little bit stickier than goods inflation, as of recently at least, and just different aspects of inflation and producer price index that we found really interesting. One final piece of economic data that I really wanted to cover this week, in addition to the hot CPI and PPI reports, we also got retail sales for the month of January. And so this echoed a really similar sentiment that the U.S. economy is nowhere near the controlled slowdown that the Fed is trying to accomplish. And so In January, we saw retail sales balloon about 3% month over month, so big growth, especially compared to the estimated 1.7% growth. So here you can see that even despite the holiday season, we had 2 negative months previously, and then we had a really positive month in January of retail sales. And so in CPI and PPI and in this retail sales report, we're really seeing that the same conclusion is happening, that the US economy is roaring. We're still seeing inflation, we're still seeing spending, and it'll be really interesting to see if the Fed continues to be any more aggressive in its tightening policy and just how these data points continue to roll out in 2023. Even though every week we get new economic data and the sentiment about markets and the economy kind of shifts, we continue to monitor this macroeconomic environment to best manage each of our portfolios per their mandates and to best take care of our advisors and our clients. Thank you so much for tuning in to Synergy Manager's Thoughts Update this week, and we look forward to providing another update soon.